Okay,
And
then
we're
Dina, when
live.
yeah,
Let's just wait for like half a minute to make sure that everything works. Hey guys, we're going to be starting very quickly. I'm just making sure that everything is working with the stream because OBS is notoriously flimsy. Sometimes it just crashes on me at the beginning of the stream. So give me a few moments to make sure everything is set up right, and we're gonna start. Thanks for joining, everyone, and we're waiting for a few more people to join before we get the ball rolling. All right, I'm just checking my OBS for now. I'll mute myself for a second. Okay, looks like we're all good. We're just gonna wait for a few more minutes for people to show up because we've also sent another reminder email just now. So let's wait for like 2 or 3 more minutes to see what's to see if anybody else joins before we start. How is everyone? I hope you're doing okay these days. I hope you're holding some Bitcoin now because it seems to be on the rise. I don't know how much we're going to be talking about the latest Bitcoin action in this webinar because we already have a set of topics that we want to cover. But if you're interested in why I think that Bitcoin is pumping over the last 24 hours, I strongly suggest going to insights.santiment.net and reading my article from yesterday that says making a cautiously bullish case for Bitcoin. This was before it started pumping, so I am very happy to be proven right. I don't care if it's because of what I wrote or not, as long as the price is going up after you say it's going to go up. That's all that matters in crypto, right? Um, yeah, anyway. In it, I make a case that a bunch of on-chain and social metrics for Bitcoin have recently been kind of, showing some bullish signals. I hope this is going to load. I hope we don't have an issue with the site during the webinar. But yeah, in it, I talk about there we go. I talk about the behavior of the biggest Bitcoin holders and how they started accumulating once again since the drop below 8.7K. We also go over a number of interesting indicators on our platform, some of them that we have kind of custom developed, including this one, MVRV long short difference. I'm not going to go into it because it's quite complex and it would take like 15 minutes alone to just talk about these indicators alone. But go to insights.santiment.net and check out the article. I think it's really cool. I spent like half a day on it. There's a lot of really interesting stuff in it. And the best part is that it's so far been proving right. For all of those joining us right now, welcome. One final thing that I'm going to mention now, and I'm going to mention at the end of the webinar. The webinar is going to take about 45 minutes, and then afterwards we are going to have a Q&A session for as long as you guys want. We have two people from the team standing by on the chat, answering questions in the meantime, but also will relay the questions to us at the end of the stream so we can kind of go over them. There's a special discount code for everybody listening to this webinar. The amount of discount codes is limited. So if you're interested in anything that you hear during the call today, and if you like what you hear in terms of metrics and how they can elevate your trading, I suggest going to app.santiment.net/pricing. And during the checkout process, enter the code webinar. So WEBNAR, and you will get 30% off Sanbase Pro as well as Sandsheets, our special Google plugin for importing all of our data directly into Google Spreadsheets. And we have a bunch of different templates already prepared for you that you can use even if you don't exactly know how to work into spreadsheets and with spreadsheet functions like I don't. There's over 10 templates that we have already developed that you can kind of use to inform yourself about the market. So, okay, I think we're about to start. We have 63 people at the moment. We are going to be having a few more join us during the call. But for everybody that's already here, once again, welcome. My name is Dino, and today I am joined by Maxim and Brian. This is going to be a very special one-time webinar where we talk about how you can beat cryptocurrency whales using sentiment, data, and metrics. So today, as I mentioned, the call itself, or the exposition part of the call, is going to take about 45 minutes, and then we are going to get into the Q&A session. We are going to talk about several on-chain metrics, most notably token age consumed, exchange inflow, as well as holder distribution metrics. And if we have time, we are going to go over some interesting ways that you can utilize our historical balance tool to kind of find out what are market moving addresses and how to track them to make sure that you don't miss on an upcoming dumps. So without further ado, I'm going to give the floor to Maxim, Santiment's founder. Max, I know you want to say a few words, and then we can be on our way.
Yeah, thanks, Dino. Thanks, everyone, for joining. It's just shortly a few minutes I want to spend on understanding properly where sentiment is coming from and where are we heading towards. We believe that crypto, the way it functions, hopefully will be functioning even more, is designed properly in a way to reward those people who make constant and the right effort. Well, sometimes it's also rewarding for those people who are doing not right effort, like scamming others. But in generally, as long as we doing right effort, increase our knowledge, apply knowledge, we are rewarded. Now, talking about an investment or managing your crypto portfolio, this is a special part where some special knowledge has to be applied. First, we cannot really use the knowledge from the past classic finances. It's like too different, much more volatile, too unpredictable, can grow 100 times, can fall 50% in a very short time, and like happens over and over again. And secondly, the crypto assets, they are like networks, representative networks of people, of participants, of stakeholders. And the topic for today will be about stakeholders, their behavior, how understanding what they're doing with their holding, with their tokens or as crypto assets, you can judge and make much better decisions. But one thing is important. Sentiment has always been, and we will always try not to cross the line where we become like, we'll give you one algorithm or one bot or one strategy which always earn money. It doesn't exist. And if anyone tells you something like this, run away. It's a blue pill. The red pill is it's possible to understand a lot, but you will still be making some false assumptions. We humans cannot know the future, but we can do much better if we understand what others are doing. So the truth, the red pill is, and this is what we're trying to do with the Santiment platform. We learn ourselves, we apply our knowledge, and we're quite successful with many of our calls. And I think at some point of time, we might even reveal what we did online with some of our holdings to prove that it was successful. And as we learn something, we share with people because we like sharing the knowledge, and we want you at some point of time, if you're willing to do it, also collaborate with us and share your knowledge or publish on our platform. So we have incentive in sharing the knowledge. We don't believe there is one or two always winning strategies, though you will see maybe during the seminar, we are saying right now there are some interesting indicators that are telling you part of the truth, but that's it. You will always need to apply your critical understanding. You will always need to make decisions. And please always stay on this line. Whatever tells people, you will have to make decisions because you are at the end bearing consequences of right and wrong decisions. So without much more talking, I think, Dino, let's start with sharing whatever we prepared for today.
Yep. Okay, yep. Good. We're already about 10 minutes in, so we should get cracking. All right, so for those of us, or those of you who were also here during the last webinar we did about 2 months ago, we talked a lot about the differences between the price and daily active addresses and in general on-chain activity. And we went across a number of social metrics and how you can use social data to spot tops and incoming corrections. So we're not going to be, if you're interested in that, there's a video on this channel that goes into depth about exactly how you can use, the differences between price and on-chain activity, as well as how to use different social indicators to elevate your trading. Go back maybe a few months into our videos and you'll find the recording from the last webinar. This time, we're going to talk about different stakeholders. The first sort of stakeholder that we want to cover are so-called strong hands. So basically people that have been, or holders that have been holding their coins in their bags for an elevated amount of time, sometimes even since the ICO days. When these people start moving their bags, it's almost always an interesting, at the very least, an interesting event in a coin's lifetime. So the first sort of step, or the first metric that we are going to talk about today, is called token age consumed. You can find it on Sanbase for all of the sort of blockchains that we cover in terms of on-chain activity. You just click on token age consumed, and it's going to. I think hopefully my internet is not super slow today, but yeah, and you will be able to plot it against the price or different on-chain and social metrics for any coin. So, all right, a brief intro. What is token age consumed? So, token age consumed as a metric puts a lot of weight, or more weight, on the coins that have remained idle or inactive for a long amount of time. So it looks into the coins that have not moved from their current addresses, and it puts more weight on them compared to the coins that were acquired in the past few days or few weeks. And as a result, these spikes in token age consumed, let's look at Ethereum. I think it's quite interesting for the last couple of months, the token age consumed spikes. These spikes in token age consumed essentially are meant to signal the sudden rise in activity of those coins. So a sudden rise in activity of coins that have been inactive for a very long amount of time. So the premise behind this metric, or why we are calculating it, is very simple. It's because long-term holders and veteran traders, they rarely make rash decisions. So we assume, and people that have developed this metric assume that these traders will execute most of their trades based on extensive market analysis and sometimes based on intimate market knowledge. So for this reason, whenever you see a spike in token age consumed, this can very often correlate with major shifts in market conditions, because essentially what it's saying is, all right, strong hands are starting to move their coins, and based on the market context and the price action, this can either indicate an incoming dump or sometimes even an incoming rally. So we're going to talk about how you can spot when these hands are starting to sell and exactly what that can do to a price action. So obviously, I think my internet is pretty slow, just based on exactly how long it takes for it to load these metrics. Max, if your internet is quicker, maybe it's better if you share the screen and you kind of go over or click through the different parts of the platform, and we'll kind of go back and forth in explaining actually what people are seeing. Maybe that's better.
You think we have some issues with internet?
At least on my side, like if so, for example, let me try going to Tether. It takes a while to load some of the metrics for some reason. Price, and you see token age consumed. Maybe it's just me. The Serbian internet is not great. All right, let's try it anyway. So we've got a number of examples ready to show you basically in practice, in action, what it looks like when strong hands are looking to sell. So the two metrics that we are going to be using to kind of figure out this specific phenomenon is token age consumed and exchange inflow. Yeah, you see how long it takes to load this? Maybe it's just my net. Do you want to share your screen, Max, and go over these metrics? I'll share it.
Continue. We will get more confusions if I now.
Okay.
Yeah.
I'll share a talk in the
chat. It doesn't take a minute. It takes like a few seconds.
No, it usually takes a few seconds, but yeah. Seems to be loading very slowly for me. Yep, it's something on my side, must be. So maybe it's better that you share your screen, because see how long it takes to load?
I'm happy to share on my end as well, guys, if you guys want to narrate while I go through it?
Sure, go ahead, Brian.
Okay.
Yeah, let's use as a stable US internet.
Yes.
Let's hope it's stable today. Yeah. Now it looks like everyone is preparing to watch a live webinar session for SpaceX launch. So all channels.
Oh yeah.
Yeah.
There it is. It's messing with
right,
everyone's internet.
Yes, right after I finish here.
Okay, so Brian, I linked
engine here.
Yeah, I linked to the list with the metrics in chat, so you can go through the first example and we can kind of see what it shows.
Perfect. Let me refresh to the latest version here. Looks like it may not be just you, do you know?
Well, that would be quite unfortunate if we all of a sudden had an issue with the internet during the webinar. Okay, can we check with Yura if is anything kind of messing with our servers? Do-do-do. One sec, guys. There's probably some sort of, well, I don't want to say DDoS, that's ridiculous, but something that's clogging the servers. All right. I mean, in the meantime, I'll just go over what I wrote yesterday because I think it's interesting anyway. Making a
Want to go back to presenting on your end?
Sure, yeah.
Okay.
And then please, guys, let me know if you figure out what the problem is. Maybe there's no denial of service on SandData, so we can just show stuff there. Let me see. Engine. This is our sort of sandbox where all of the metrics that we develop first end up on SandData, and then we start porting them to app.santiment.net, which is really the sort of basic the front-facing platform for Santiment. Okay, well, so far I'm getting blanks all over the place. See?
Yeah, it looks like the problem is universal. It's also happening on Sand Sheets as well, and it looks like our viewers are seeing the same thing. It could just be a little bit of a traffic overload all of a sudden.
Did the devs make any findings? Anyway, in the meantime, I'm going to talk about Bitcoin because I think it's interesting, and then we'll see what happens with the site as we go along. Anyway, let's talk about Bitcoin then while we get the technical issues sorted out. Making a cautiously bullish case for BTC. So I wrote this article yesterday because I noticed that in talking to Max, I noticed that there's a number of on-chain and social metrics that were kind of starting to show strong buy, well, not strong buy signals, but generally a bullish sort of turnaround. So actually one of the metrics that I'm going to talk about here, we wanted to cover today anyway, and it's the sort of the behavior of large addresses. So we've just recently to SandData added this particular metric, which lets you select a coin that we track in terms of on-chain data, and you can select the amount of holders by any sort of number of coins that they're holding. So currently we're looking at everybody, all of the addresses that are holding more than 100 Bitcoin over the last 6 months, well, 5 months, year to date. So this was the sort of where my research started, I noticed that ever since the drop all the way down to, what was it, like 8.7K, I noticed that the whales, or everybody, all of the addresses holding more than 100 Bitcoin, started accumulating once again. And this is not the first time it happened. It usually seems to happen over the last couple of months at least. It seems to happen during the dips. So whales are obviously fairly smart people, and they like buying into market corrections. You can see this massive spike in the amount of addresses holding more than 100 coins. This is 400 new addresses being added to this 100 plus BTC club, specifically during the Black Thursday event. So for whales, they were not like concerned about the downfall of Bitcoin because of the coronavirus pandemic. They were just starting to accumulate more and more to their bags. And we saw the same thing sort of here. The whales were starting to accumulate into the rally, and then they started dumping sometimes maybe 1 or 2 days before the first correction here. So, during the halvening event, there was quite a lot of hype, and I think whales were kind of susceptible to it as well. But they definitely started offloading some of their bags, and an ensuing correction happened over the next 24 hours. So this time, over the last 7 days, we are seeing a repeat of this scenario, at least I believe. Once again, the whales are kind of accumulating into the dump. We're seeing the number of addresses holding more than 100 Bitcoin spiking very quickly. So over the last 7 days, there's been 800 new addresses that are holding 100 or more Bitcoin. So these are humongous addresses, very large whale holders. So this was sort of my starting point, where I thought, okay, it looks like that people that are really kind of that have their pulse in the market are starting to accumulate once again. Now, if we are indeed going to see once again a bounce back as we are experiencing it currently, and if we see a push above 10K, I would keep my eyes peeled on this metric, because if you look at the historical dips, they usually seem to come 1 or 2 days before a correction. So for now, I think there's room to grow. I think the whales are content with accumulating, but if in the next couple of days we see a breakout, maybe even above 10K, and this metric starts declining once again, whales start offloading, it might be sort of a deja vu of the recent dump as well. So this was, metric number 1 that I wanted to cover in my analysis. Metric number 2 is very interesting. It's something that we have developed in-house. There's nobody else that has this metric in particular. We call it MVRV long-short difference. So obviously that's quite a long name. And for those of you that are not familiar with MVRV ratio in general, it can be quite complicated to explain. But at the very basic level, what MVRV long-short difference does is it tries to look at the difference between the profit or loss, average profit or loss of long-term Bitcoin holders versus the average profit or loss of short-term Bitcoin holders. So we developed this metric on top of the very popular MVRV ratio, which is a fairly new validation method or valuation method that seems to kind of show that when people are underwater, or when the average holder is either breaking even or is currently actually down on his initial investment, this proves to very often be a good time to accumulate Bitcoin, and vice versa. When you see these massive spikes in the MVRV of long-term holders, meaning maybe long-term holders are currently 200 or 300% on their initial investment, this is usually a very dangerous time to start accumulating, because it's at these points that holders start dumping their bags and they can profit. So what MVRV long-short difference does, it has nothing to do with longs and shorts in the derivative market. It looks at the difference between the MVRV ratio, or the average profit or loss of long-term Bitcoin holders, and the MVRV ratio of short-term Bitcoin holders. So what we've discovered when we created this metric is that this particular indicator, and you can find more information about it here, will often bottom out at the lowest point of Bitcoin's bear market, and then it's going to peak somewhere at the top of its bull cycle. And we also noticed that it's only been a few times in the lifetime of this metric that it's actually crossed the 0% mark. And pretty much every time, so currently it's only been 4 times in Bitcoin's life cycle that the MVRV long-short difference went above 0%. Every time it happened, So far, it's signaled the start of a bull market, or at least a breakout over the next couple of months. The first time it happened was in 2012. You can see what happened next. The second time it happened was, at the beginning of the 2015 rally. The third time it happened, actually, we wrote about it right here. Valentin, our CTO, wrote an article right here saying, Bitcoin's MVRV long-short difference. At that point, it was a new metric that we developed. It just crossed 0% for the third time in Bitcoin's history. Over the last couple of, over Bitcoin's inception, since Bitcoin's inception, the only other two times it happened, it led to a bullish breakout. And within, I think the next, I think I have it in the article here. So we wrote it. Bitcoin was hovering around 5,900, and within a week it reached the 8,000 level, and 45 days later it was retesting 13,000. So once again, it proved to be very successful in predicting Bitcoin's price or push upward. The last time it happened was actually in February of 2020. So it was right here. And actually, although you don't really see it here because it's very zoomed in, Bitcoin started rising once again. I mentioned in the article that, where are you? The price of Bitcoin grew by 9.6% within a week after the MVRV long-short difference crossed the 0% for the fourth time in its history. And then the coronavirus pandemic happened, and the Black Thursday, event occurred. So we'll never really know what this might have done to the price of Bitcoin, especially into the halvening, as the 0% mark was broken. However, I was looking at it over the last couple of weeks, and I noticed that the MVRV long-short difference is once again approaching 0%. It's currently at around 2.7%, which means, over the last 2 weeks, I think it went from minus 18.5% to just minus 2.75%. What this essentially means is that long-term holders or long-term Bitcoin holders are very close to overtaking the short-term holders in terms of their average profit or loss. So long-term holders are now starting to almost be at a higher profit compared to short-term Bitcoin holders. And this has in the past indicated a bullish breakout. So Valentin makes the case that the explanation could be that short-term traders usually profit when the market is down or sideways. And during a bull run, it's the long-term holders that have the final call. So when they start to sell, that will basically be the end of the bull run. We are very close to MVRV's long-short difference kind of breaking 0% once again. And if it does in the next couple of days, I think it probably will if we start going up again. It's something to definitely to keep an eye on, because it's a very rare event in Bitcoin's life cycle. It only happened 4 times so far. So it will be very interesting to see how the price reacts since. Guys,
hey, Dino.
Yeah, go ahead.
A couple things. For one, you probably saw the chat. We should be back live again. Everything should be working if you want to test it. Okay. And also, while he's testing, I'll just add on to what he's saying about MVRV long-short diff in the way I've come to understand it since I've joined the team, especially when it crosses that 0% threshold. That tends to be the measurement for the average investor when they go into the green in terms of long term investors and short term investors. And when this happens, it tends to be a sign that the average investor is willing to FOMO in more because they're in the green. So the reason we see those upswings, from my perspective, is that we see that the average investor is okay with taking more risk at that point. And that's why it's kind of the FOMO threshold cross, in my opinion. And then alternatively, when you see that line get really low, around the -20 to -40% range, that's when those bottoms really start to occur. And you see what Dino's showing right now, historically, that -40 to 50%, pretty much since the beginning of Bitcoin, going back to 2011, 2010, whenever it gets that low, that tends to be where bottoms occur, because it very rarely goes lower than that. And over time, as Bitcoin gets more and more saturated with more and more addresses, it's harder and harder to even get that low. So you may notice that the lows over time are more like -20% most recently, and might even go to -10% in the near couple of years. So I think that's really cool. And I'll send it back to you, Dino.
Yeah, thanks, Brian. Pretty much exactly what Brian said. I'm not going to go over the next two, which I think are very interesting, including the social media sentiment turning bearish. Just read the article. We're back. So, okay, finally, we can showcase a few examples that we wanted to show in terms of the strong hands looking to sell and how that might look like on the chart. So, as I mentioned, the token age consumed looks or the spikes in token age consumed essentially mean long-term holders, people that have been holding onto their bags for a very long time, sometimes even since the inception of the coin, of the network, are now starting to move their bags. So in and of itself, this doesn't necessarily need to impact the price of a coin. Obviously, for example, if I am a long-term holder of, in this case, Engine, and I'm just basically moving my bags for some no good reason, I'm moving it to another private address that I own or somebody else owns, this sort of individual transaction might not make too much of even a blimp on the radar. However, once you put it into a higher market context, and especially if you see a spike in token age consumed and a correlating spike in exchange inflow of the coin, which essentially means the amount of coins, in this case Engine, that are entering exchange wallets. So this is an on-chain indicator. We are tracking the amount of Engine that are going from private addresses, private wallets, moving to centralized exchange wallets, the wallets that we know are labeled as belonging to centralized exchanges. So this is the event that I wanted to show as a first sort of first and a fairly easy to understand event. Even if we zoom out, you can see exactly how big the spike in token age consumed was and the sort of short-term correction that it entailed. So we saw for Engine specifically, on May 26th, we saw a massive spike in token age consumed, the biggest one in probably 6 months, as well as a correlating spike in exchange inflow. So you can go into different parts of our platform to even go deeper and figure out exactly where these coins are coming from and going to. But essentially, this is a pretty good indicator that somebody or one or two or more people, long-term holders, strong hands, are now looking to sell, probably to take advantage of the action here. And this is what happened very quickly, and this is what happens in all of these cases and many others that we see. We see this all the time. This sort of sell pressure, especially from people that are kind of in the know and can analyze the market very well, tends to lead to a short-term correction for the coin. And over the next couple of hours, maybe 24 hours, Engine went from 0.198 to 0.183. So this is something to keep in mind when looking into token age consumed. It's not that each spike is going to mean, people are selling. But when you see a correlating spike in the amount of coins moving to exchanges, it's usually a pretty bearish sign for the coin's short-term price action. Let's look at a few more examples because this is something that we see all the time. I even wrote about it recently, which predicted one of Ethereum's bottoms. So let's look at it for in case of Augur as well. I hope the DDoS guys have stopped. Yeah, there we go. Actually, I think I have a clearer one. Is it that? Let's see, let me load a few of them and then we can decide which ones to show. Yeah, okay, this is quite a nice one. So this is the last month, the price of BET and the token age consumed and exchange inflow metrics. So, I mean, it doesn't get much clearer than this, I think, in terms of what a spike in token age consumed and spike in exchange inflow can do to the price of a coin. So we're looking at a huge spike in the basic attention tokens price. It's currently at 0.2%. So it went from 0.179 to 0.24 in 48 hours. And during this massive rally, we saw two big spikes in token age consumed. We saw it, the first one here at the before the actual top, and then the second one before the actual correction. And alongside them, we saw three massive spikes in the exchange inflow, or the amount of coins, BAT coins, moving to centralized exchanges. So if you were looking at the charts here and you saw this particular sort of setup occurring on the graph, you saw a massive spike in exchange inflow and long-term holders starting to move their coins at the same time. As I mentioned, this usually tends to be a very bearish indicator, and this is exactly what happened with the price of BAT since. Now, you'll also notice there were some spikes in tokenage consumed, like here, like even here. I think even here, that didn't really kind of do all that much to the price of the coin. There's not anything specifically happening in terms of the exchange inflow for Bitcoin at any of these junctions. So this might be just long-term holders moving bags to another private address. So obviously there's a difference in the impact that will have on the market and the price of the coin, right? By the way, Max, stop me at any point if you want to jump in and contribute anything to what I'm saying. But in the meantime,
it's okay. I think I will sum up a little bit once you show some examples.
Okay. Another, like as clear as it gets in terms of the example, is the recent OMG pump. So OMG pumped like crazy starting like early May, right? Yeah, May 11th. And we saw several spikes in both tokenage consumed and exchange inflow that kind of correlated with the first a consolidation period and then the actual top. So the first time we saw a spike in tokenage consumed and a correlating spike in exchange inflow was right here, right around May 15, when the coin faced its first hurdle and started correcting soon thereafter. So this was sort of the first attempt of people, or the first time that some long-term OMG holders are starting to exit the market, and the market reacts almost immediately afterwards. The sell wall seems to be too strong or too high for the bulls to absorb, and it leads to a very quick correction. Now, the second time it happens, it was a much stronger event, and so far the price hasn't really been able to recover all that well. So we see a huge spike. What is this? This is like, let's see, 4.29 million OMG moving to exchanges. So this is at current prices, what, about 5 million? OMG moving to exchanges, as well as the biggest spike in tokenage consumed so far, meaning a substantial amount of previously dormant coins are now moving to what is it? Bitfinex, Binance, Coinbase, maybe. There's a lot of exchanges that OMG is listed on. So when you see this type of a setup, especially during a price rally, it's usually a nail in the coffin for the price. Not always, as you can see, sometimes it's just a short-term correction into a larger rally, but even then, like, you would be advised to, at least for the time being, exit the market here and then maybe buy back into it here or here. But this is sort of the what you can gain from figuring out exactly when long-term strong hands are looking to sell their coins. Let's look at another example, and then maybe you can, Max, you can join in. Thank you to those guys for letting me actually do my webinar. Much appreciated. All right, hopefully I didn't. All right, we're back, I think. Yeah, GG, exactly. I think we're back once again. Max, please let me know if we are. But it looks like, yeah, it looks like we're back live. Sorry, guys, the OBS crashed as well. Sometimes these things happen. You can only take them on the chin. Anyway, the last example, as far as exchange inflow, tokenage consumed, working in tandem to bring down the price of the coin that I'm going to show today, happened with Aragon. This is a 30-day chart or 1 month chart, and we're looking at these particular spikes here. So there were 3 of them in terms of tokenage consumed, basically going into the rally. The first time here at the midpoint, and then the second one here before the final push, and along with the third one that happened right before the correction. So we saw in all 3 of these places we saw a correlating spike in exchange inflow. So it happened here first time, and then here the second time. The highest one was here. So sometimes, this isn't going to, it's not like a perfect measure. Sometimes it's not going to capture the very top. People put their coins to exchanges but don't sell it immediately. But it usually indicates that, over the next couple of hours to sometimes days, but usually hours, we're going to see a huge sell pressure occur on a coin. So this is what happened here, and then here at the very start of the decline, we saw the last massive spike in both tokenage consumed and exchange inflow. Essentially, once again, and then you can see just briefly even here over this in this last top, there was a big spike in just exchange inflow, just general, day-to-day speculators moving their coins to exchanges, and even that has kind of crashed the price pretty effectively. So these are the types of things that I would be looking into for spotting when long-term holders or strong hands are starting to move their bags and dump on the market. When you see these two metrics work in tandem, it's usually a very bad sign for at least a short-term price action for the coin. Obviously, there's a lot more that goes into analyzing if the coin has bounce back potential, how big the correction is actually going to be. We are not going to go over, all of the metrics that we have at the moment, but this, I think, is a good starting point for you to understand exactly what are the major market forces doing, how are they behaving, and how their behavior can impact the price of the coin almost instantly sometimes. So Max, before we go into whales and what whales are doing,
Yes.
you want to add anything to this?
Yeah, just to give some context. When we analyzing, or when we want to understand what the forest is in front of us, what we're doing now with this, what Dino did, we analyzing specific kind of trees, looking them very precisely in the depth, but always need to take step back, and it's not the only metrics you pay attention to. It's never like one single metric which rules them all. You step back and you try to understand the behavior, why people are doing what they're doing. Here we showed like old stakeholders, because token age consume shows where dormant tokens moved. We also need to pay attention to the crowd, to the current crowd, and we use for this different metrics. And you need to pay attention to, for instance, market makers, because they're like circulation, or they're holding tokens frequently.
Mm-hmm.
Yeah? And it's a kind of, we call it sometimes holistic view. Once you understand the whole picture, then you can make a very precise market call. Still, you could be like a bit wrong, but in order to see the whole forest, yes, we do pay attention to specific trees, but always remember, need to come back and try to combine all of them together to have a holistic view. And that's why some of the metrics, when you look at them only on these two metrics, token age consume and exchange flow, when you take only these two, it will show you a kind of different pictures. Yeah, they will all spike, and some of them will pinpoint the ultimate top, some of them are intermediate top. Why? Because it doesn't reveal you the whole picture of all tokens behavior.
Yeah.
An example, you still have OMG in front of the screen, right?
Yes.
Yes, because in the last, typically whales and big token holders, they start moving the market. They are the ones who are moving the market. No any retailer never can move any market. Big players, they move the market. And this is the same what you showed in Bitcoin in the beginning. Now, but after some point of time, in some specific cases like here in OMG, because listed on Coinbase, retails jumps on board. We see this the last final and quite a substantial spike. And in order to track it, we use a different metric. Yeah, we use this emerging trends. And when we see it gets to the top there, so retails now full in crowd, okay, then you have the top. Yeah, so whales, market makers start moving the market, and they can leave it. Sometimes they leave it in the beginning, even quite in the beginning, after 20-30% profit for Bitcoin or 2-3x on OMG, they will leave the market. It's enough for them. But then if the crowd is activated, if the crowd is really retail, small traders start to pumping in, market will keep pushing.
Yeah.
And then you start analyzing, okay, how the retail is behaving. Are they now becoming irrational or extreme? Are they now move too much? So are they move too much to exchange to buy all these tokens? But just to give background how the whole behavior analysis can be done.
Yeah. I just wanted to, before we go into whales, just one caveat to everything that I just mentioned is the token age consumed, like in itself, it's not necessarily either a top or a bottom indicator. It's usually just a volatility indicator. It basically tells you, keep an eye. Long-term holders are starting to move their coins. It can mean very different things based on the price activity of the coin at the time, based on other metrics. Like, for example, if you look at token age consumed spikes for Ethereum over the last 6 months, you can see these spikes earmarking several sort of local tops. Even here, obviously, during the Black Thursday event, and here before the rally, I wrote about this phenomenon where we saw major spikes in Ethereum's token age consumed before the rally. I wrote about it here. There was a spike in token age consumed right before this burst. I can find an article later on to share with you guys. But I wrote a brief blurb saying, there was the biggest spike in token age consumed in almost a month. Usually, or at least recently, historically, what this has meant is that there's a breakout potential waiting to happen. We got some flack on it on crypto social media saying that that's probably not that's not going to happen, and then you can only look at the single indicator, which I agree with. But you can see what happened afterward, and the similar thing happened here. So there's a spike in token age consumed for Ethereum right before this move upward. So what you want to do when you're examining exactly when people are looking to sell is you want to look at token age consumed and plot it against the exchange inflow to make sure that both of those work in tandem to actually drive the price down. Okay, that's going to be it for the this portion of the webinar. Now we move into very, very cool stuff, whale behavior. So essentially over the past maybe 30 days, we've added a number of holder distribution metrics to Sanbase. So now on Sanbase, you can go into any Ethereum-based coin, as well as Ethereum itself and Bitcoin, and you can click on holder distribution. And what you are going to get is a whole lot of different lines. But what you can do then is you can deselect some of these, and you'll be able to see or select specific holder categories. You can currently, for example, we're looking at the price of 0x versus versus people or addresses that are holding between 100 and 1000 0x. So you can see that these addresses, or the number of these addresses, has kind of started growing into the rally. They don't really pay too much attention to what's actually been going on to the price with the price of 0x. So of course these are very small holders, so we're not really expecting them to move the market anyway. Now we're here, I said let's look at the 1 million to 10 million holder distribution, and how they behave during the frequent or recent 0x pump. Let me just cancel everything out once again. Okay, so I want to show it. Can I zoom in? Yeah, there we go. Okay, so I wanted to show this particular event. So here we see the number of addresses holding between 1 million and 10 million 0x kind of growing into the rally. Yeah, there were some like ebbs and flows here and there, but in general, the trend is fairly constant and consistent. And then boom, there's a major downfall in the amount of addresses holding between 1 million and 10 million 0x right at the middle of the rally. And it obviously bottoms out here at the very top. So this, if you compare it to the exchange inflow, you'll also see a spike in exchange inflow here at the top for OMG. This is indicative of with very big holders, doesn't matter if they've been big holders for a while or not, whether they just moved into coins or not, but it indicates a very strong paradigm shift, a very strong behavioral shift over the last couple of months, where all of a sudden they move from an accumulation period that lasted for, what is this, like 40 days, move into a strong dump mode. And this is what happened to the price very soon thereafter. And then pretty much a deja vu event happens right afterwards. So people, whales start accumulating into the dump, into the drop, and then start offloading their bags once again when the FOMO crowd gets in here. So this is one other thing that we wanted to showcase today, and this is exactly how whales tend to behave, especially when it comes to like these low cap or mid cap coins, and how you can sometimes, based on understanding their behavior, make informed, trading choices and sometimes smarter moves than even themselves. Max, do you want to jump into something here before I move on?
No, all good, because as we said initially, whales are the one who are moving the market.
Yeah.
And you can, by observing even such aggregated metric, without going too much details, we will cover a little bit later, you can specify specific addresses who the whales that are doing their job well.
Yeah.
It's like surgery. On an aggregated metric like this, you can say, okay, they have started accumulating. And as you see, they've accumulated or even before the crash, and they didn't change much even during the crash. And they even kept accumulating because they knew for 0x it will be revealing the things which 0x revealed ever since.
Yeah, I think this is even
many of the whales, they're in the talk with the projects, or with at least some of the projects in the communication. They say, okay, now it's time for me to slowly accumulate. Yeah, so they're an advantage to the retail, to us, to crowd, and we can use it to our advantage. Once we notice that whales accumulating for specific project, which is not a scam, like 0x is not a scam. So yeah. Okay, maybe I can bet with them. If they bet in their millions, why I like to bet my portion of money too. And once you see the start dumping, well, this is where you make a decision. Do you want to join the dump? Actually, as you see, they start moving their funds before the top happens, because they need to move it somewhere, be it over the counter or to exchange. It takes some time before they can really offload to the market. So, but when they start moving, you can already pick it up smooth, and you can play the game with them. Yeah.
I mean, you could also just look at like long-term trends. If you were here and you saw this sort of accumulation period for whales, it's not 100% of the time that the whales accumulation leads to a rally. But in this case and many different cases that I've seen, it seems to be sometimes a self-fulfilling prophecy. The confidence among the coin's biggest holders seems to translate into a short-term boost for the coin, and this is what happened here before the actual dump. All right, moving on to a few different examples that I found. Engine, oh, actually we covered engine already. Maybe do something fun like Matic. Okay, so...
Also, it's a great Matic, yeah.
Yes. So Matic is currently also having itself a pump, which I think is going to be very short-lived, just based on what I've seen. Like if you look at social volume, for example, for Matic, I think it's... Well, you can't see exactly how big it is because of this massive spike, but currently Matic is in the top word, I think, in our emerging trends. I don't want to get too off topic here, but we do have a number of social indicators as well. So if you go to labs and emerging trends, you'll be able to see the top 10 words based on our data that are gaining the most volume on crypto social media. And at the moment, at least when I saw it last, now it's moved to Goldman. But 3 hours ago and 2 hours ago, Matic was the biggest sort of developing topic on crypto social media because of this pump. And we've done some back testing on this phenomenon. And usually when a coin lands in the top 3 places on this list, it's a very bearish sign for its short-term price action. We've done some analysis on over 200 cases when this happened on our list. In the next 12 days, the price of the coin on average dropped by more than 9%. So it's even back tested and data proven that it's not a very good sign when a lot of people start talking about you especially during a rally. But we're talking about whales now. So let's go into holder distribution. Let's check out all of these unnecessary small fish holders. And what was the one that I wanted to see? Oh, I wanted to see the top 100 holders. Okay. So in that case, you go here to amount in non-exchange top holders, and you select 100 biggest addresses. So currently we're seeing what you're actually selecting here is you're looking at the amount of Matic held in the biggest addresses that are not belonging to exchanges as far as we know and as far as our labels are concerned. So what we wanted to show is this particular event. So anybody that's been tracking Matic in early or late 2019, early December 2019, knew that there was this massive sort of spike pump and dump happening, which kind of crowned Matic the pump and dump king of 2019. There were some articles proclaiming it as such. And this is what happened with whales. So the biggest, 100 biggest in the non-exchange holders of Matic throughout that time. Let me try and zoom in here. Yeah. So Max, do you want to kind of talk about this particular behavior of whales so that you can see that they kind of start, once again, they don't start dumping at the top. They are already here priming for the dump ahead of time, right?
Yeah, well, as we said before, the crowd, especially, I remember this first pump of Smatic. I think many of us remember.
Yeah.
The crowd was in, so and it was a massive pump. So even whales selling into the crowd, it was enough steam power to pump it. I think it was one of the first nice results for Binance IO. And then whales did their game and the price pump. And at that time, I think it was again the same story. They had landed on our top 1 or top 2 place of emerging trend.
Right here.
Yes, it happened at the top. So eventually, over time, as the distribution takes place, and in Matic, I think it took place where whales already, to big degree, distributed their coins to retails, to crowd. They will not play so big roles anymore. I mean, the increase will not impact the price so much anymore. What could happen if they start increasing at some point of time? That will be a very interesting sign.
Mm-hmm.
But once you see that top holders, the importance in the network is falling down, and here we see like it's I think halved, or like it's less than from almost 8 billion tokens to how much? Oh no, it's actually still.
Are you here, or do you want to look at now? It's 7.34 at the moment.
Okay, well, it's still okay. They're still quite substantial in the network. But if it, and I'm pretty sure it will keep distributing further. So they will play less and less importance into network tops and bottoms.
Yeah. Well, I think in general, though, I think currently what we're seeing once again the whales gonna start to decrease their holdings sometimes mid into the rally. And given the fact, like obviously this isn't financial advice, anything can happen. Matic can go and become the next. Well, I'm not gonna say anything, but anyway, the fact that we are now seeing this spike in social mentions and Matic ending up on the top 1. Place on our emerging trends list, and let's look at the exchange inflow as well. Oh, look at that, there's a major spike in the exchange inflow. So these things tell me that Matic is kind of entering a dangerous territory here, especially if we're looking at the behavior of their whales over time and what they did before the last sort of dump. It might be a bad place to enter into Matic here. I'm not gonna, say definitely, but there seem to be, at least in its on-chain and social data, there seem to be some worrying signs. Let's put it like that. All right. Finally, in terms of looking at whale behavior, I wanted to look into Aragon and specifically the holders between 1 million and 100 million Aragon. So moving to holder distribution. filtering out all of the small fish holders. Where are you? Hold on one sec. Did I do this right? 1 minute. Let's see it here in sand data, what I wanted to show. Because 1 million to 100 million, it currently doesn't really return any data. So let me see it here. Yeah, it does. Okay, it might be for a second once again bugged on sand data, on Sanbase. So let's go into our sandbox and show you to you guys anyway. Specifically, this part here, I think, speaks for itself. You're not going to see this happen all the time, not even most of the time, like this clear of a whale dump. But sometimes it happens, and when it does, it makes for a beautiful chart. So we saw the price of Aragon go from, what is this, 0.93 to 1.36 in a matter of maybe a week. The first signal that whales are kind of looking to offload their bags happened here, sometimes in the middle point of the rally, and it did indeed lead to a pretty quick correction. The whales started buying into the dump once again, and then offloaded right here at the top, and then in the next 24 hours, we saw a correction start to occur. So this is, I think, the power of actually making informed decisions based on data. This is just, an accumulation of or aggregation of what we are, currently seeing on chain, translated into informative trading, decision making. Once again, as I mentioned, these are a few examples that we think are illustrative of the point. It's not going to be 100% of the time 100% correct. Sometimes these dumps might not, lead to a short-term correction. But especially when it happens during a rally, and if you see a correlating exchange inflow, let's see if there was a massive spike in exchange inflow at that time for Aragon. I would not be surprised. Oh, look at that! There was. So when you see this plus whales dumping, I would be worried myself. And it even happened here: exchange inflow, and then bam! From there on, price of Aragon went into oblivion for a while. So I'm not going to go into any more examples of this because we're already overdue thanks to our DDoS friends. But these are the few examples that I wanted to show in terms of how you can use holder distribution metrics, especially those people or those addresses holding large sums of a particular coin. Obviously, a large sum is going to be different depending on exactly what the price of the coin is. So to do that, you can either use holder distribution metrics, or you can use these metrics. You can look at the amount of, in this case, ANT, in the biggest exchange addresses, or in the biggest non-exchange addresses, and even select the exact amount that you want to look into. So Max, before I go into the last topic and we address some questions, anything you want to add here?
Just to clarify, because I see the question on our stream, when I ask what from examples we covered, it should be linked later on.
Yes, sure.
In description.
Sure.
Yeah. There are good questions.
Right now.
There are good questions to Ravencoin or Stellar. Just to make clear, if we're talking about whales behavior based on on-chain metrics, what we can cover now is Bitcoin, Ethereum, and all ERC20. Yeah. Neither Raven nor Stellar, unfortunately, don't provide, or we don't have on-chain metrics for them. We might have it in the future. So examples we should cover now, we will not be able to do for Raven and Stellar. Having said that, we could cover Raven, especially Stellar. I think we did it even at least once or a few times for Stellar in the past, based on social data, how analyze the social data for them communication. And in many of cases, this alone is enough too. Yeah, so jump on our Discord and we can discuss it there. For the sake of this sharing, examples we shared mostly for ERC20s or Bitcoin.
Yeah, I mean,
If
we
you
currently
think
collect data.
it was something.
Go ahead.
Yeah, if you think it was interesting but a bit too fast, yeah, because we try to push so much content in a limited period of time. Just mention it now, and we will know. Okay, if you want to get more details on it, we will put links to either insights we wrote or specific chart layouts. We now have like feature on the platform where you have chart layouts. It's already preset set of metrics, so we can cover you with information on what we discussed now, and you can check it out later when in a quiet time. Okay.
Okay. Yeah, so as far as on-chain data is concerned, we currently have on-chain data for Bitcoin, Ethereum, all ERC20 coins, Litecoin, Binance Chain, what am I missing? BCH, EOS, I think we're deprecating at the moment. So we do cover a lot of the top 10 and then all of the Ethereum-based coins from an on-chain perspective, but we also have, custom-built exclusive social data for all of the coins in existence, at least on our database, as well as development activity information for all of the coins as well. So it's not like if you're interested into looking deeper into XLM, you can't find anything on our platform. It's just that currently, at least, we didn't get too many like requests for on-chain data specifically for blockchains like Stellar, but we can introduce it in the future if we get enough requests for it, if we get enough customer feedback. Okay, one final thing that I wanted to show before we go into questions. And this is just going to be a teaser because we don't really have too much time, but I wanted to show everything that I showed today is maybe 10% or less of actually things that we have on our platform. But one very cool thing that I like to do to show exactly how granular you can get with our platform, I call it address hunting. So with the access to Sanbase Pro, you can get access to all of the metrics that we showed today, as well as a number of different tools. One of my favorite tools to use is called historical balance. So, for example, I was looking into Aragon recently, right? Let's go into Aragon. And I was interested in these particular spikes. So if you go into exchange inflow, yeah, you can see there was this massive spike in exchange inflow correlating with the local top and then a correction in terms of for Aragon. So if you're only looking at aggregated data, this is interesting. But what if you want to know exactly what addresses impacted the price of the coin? What are the whales that actually, where did this sell pressure come from? Do these whales still have some Aragon? Could they dump on the market again? You can actually find that out with Santiment. So you would also need a subscription to SandData, our sandbox, but let us know in our Discord and we'll give it to you, because one of the tools that we don't currently have on Sandbase, but we're planning on moving eventually, is the top transactions for any specific coin that we track on-chain data for. So one thing that I did was I went into Aragon last 30 days. Yep. And I was interested in this spike in transaction volume and exchange inflow. So I zoom in on this place and time. And what this beautiful tool does is it lists out all of the top transactions for Aragon at this point in time between, March 11th, May 11th and May 13th. You can just filter out by the top amount and you can see the biggest Aragon transactions with a link to Etherscan as well as the from and to recipient address. So one of the things that I did, let me just see which address I was actually looking into, because I don't want to waste too much time doing it again. Let's see, was it this one, 307? Yes, it is. So it's actually the biggest transaction here. I went into its Etherscan. I noticed that there was 100 Aragon or 100,000 Aragon, which is a lot for a small coin with limited liquidity, went from this address to this particular address during the pump. And when you go and look at what that recipient address did to it, oh, look, it almost immediately sent it to Bittrex. So next thing I did, I went and looked into the sender address. And I noticed that the sender address has received most of its coins a long time ago. So almost, what is this, like 2.5 years ago, it got a lot of coins from Bittrex, and then it started it sent a little bit of it to DEXs over time, but really it started, or it ramped up its offloading position here 14 days ago, when it sent 100,000 Aragon to this address, and then from this address to Bittrex. So what can you do with this information? Well, you can copy this address and then go back to Labs historical balance. This is, by the way, a completely free tool, even if you don't have Sanbase Pro. And you can paste the address, and it will show you the historical balance of this address over time for the coin, and you can plot the price of that specific coin, so that you can see exactly what this address did with Aragon, when it went into Aragon, when it started selling, and how much it has so far. And then based on this information, you can understand or analyze whether this address is important for you to track going forward. And in a minute, I'll show you how you can track it with Sanbase. But very shortly, we can see, actually, let me zoom in a bit. So it's like 2017. Yep, from 2017 to 2020, today. Let's look at what this guy did. So this guy went into Aragon, started here, very early on. It gotten a lot of its bags here during the 2017 rally. It even bought a bit here. And then from then on, it dumped a little bit of it here. And since then, it even bought more, and has been, for bar a few small dips here and there, which aren't really market defining, it's been holding on to its Aragon bags for most of the 2017 and 2019, and bam, it started selling off once again here. So let's look at when it actually sold off. So the first time it did, it only spent like 5,000 Aragon, which isn't really all that much. And even then, like, it did it at a pretty opportune time, like before this this very drop. I think it might have actually been scared about this correction, so it started dumping. But here we can see that the biggest drop in its Aragon holdings so far happened right at before the top. So it started dropping or dumping its bags here. And finally, the actual 100 Aragon that it sent to Bittrex happened somewhere here, and then this is what happened with the price of Aragon afterwards. So it was right on the money as far as knowing when to get out and avoiding an incoming dump. So at the moment, this address still has about 500,000 Aragon. The last time it sent 100,000 Aragon to Bittrex, this is what happened to the market since. So let's assume that this address has major market moving potential. What can you do with this information? Well, you can click on Generate Signal. You can pick an asset. It's already picked if you use it here. And you say, I want to be alerted when the amount or the balance of this address decreases by, let's say, 50,000 Aragon. So in that case, you just need to connect your Telegram or email with Sanbase, and you can create either a public or a private alert, and you will be alerted the next time on Telegram or via email, the next time this address starts moving their bags. So if you are, for example, interested in Aragon, if you hold some Aragon and you want to avoid being dumped on, it might pay to really know what addresses are doing the dumping, and I showed you how you can do that through Sanbase and SanData, and then go here and actually generate a signal so that will alert you when this address goes back to its dumping ways. So this is going to be the last sort of exposition part of the webinar. I'm sorry that it took a little bit longer. Obviously, we've had some technical issues. I would like to thank all of the DDoS people for letting me finish, even though they kind of made my first 15 minutes miserable. Gary, if you're in the chat, can you please come back to the call and let us know if there were any questions that we can answer at the moment before we end the stream?
Dino, I'm also happy to show off the Sandsheets template for a couple minutes if anyone would be interested in that.
Sure. Let's since we've already had people here for an hour, let's start answering some questions first, and then anybody that wants to hang out afterwards, we can show a few more stuff around the platform.
Yeah, we'll
By the
do it
way,
as a
guys,
little bonus at the end.
Yeah, sure. By the way, guys, we can do. I also wanted to just mention once again that everything that you saw today, you can get access to by going to app.santiment.net/pricing. The price of Sanbase Pro subscription monthly is $49 a month. Actually, now 44. Interesting. In the checkout process, you type in the code webinar, and you'll get 30% off your first billing cycle. So whether that's just a month or a yearly subscription, you'll get 30% off. What I showed you today is maybe 15%, including this historical balance of everything that we have on the platform, and we are going to be porting everything from Sand Data all the way to Sanbase in the next couple of months. So there's more content and more metrics being introduced to Sanbase all the time. So I strongly suggest, if you liked anything that you heard today, to take advantage of this action, because the amount of discount codes that we're giving away is limited, so it's only on a first come first serve basis. And also join our Discord. The link is in the description of this video. If you don't want to wait until the next webinar, we only do this maybe every 2 months. Join us and talk about trading, on-chain social media data, anything at all. Talk about this stuff with us and the Santiment community members on a daily basis. Anyway, Gary, I hope you're here.
Yeah, thanks, Dino. Gary's here. So basically, we just missed only one question from the very beginning. It's about MVRV, long short difference. If I have 1,000 BTC and send it 10 times by 100 BTC, would this metric be cheated?
Oh, so if you have 10,000 Bitcoin and then you send it not once but more than once, right? So no, it will only count it as once, because the way it works is it looks at the amount of time that you have spent, that all of the Bitcoin have been kept in their current addresses. So the first time that you change your address or move your Bitcoins from address A to address B, this is kind of treated by the metric as an important event. But then from then on, the time that has I think it's spent between going from address B to address C is pretty low, so it wouldn't really impact the metric at any sort of any significant point, because the actual profit or loss that you are accruing between the times you move coins from address B to address C and address C to address D, it's not very much, right? You're not really going to change the average profit or loss of your coins all that much by moving coins between addresses. We can, for a more detailed or technical explanation of exactly how this metric works, we could have Valentin, our CTO, explain it to you on our Discord. But the short answer would be no.
And on top of it, just to add, manipulation of the data in crypto is profitable business. We know it.
Yes.
When exchanges reported volumes, we are the top one. Yeah, to come to us, trade on us. Now, but manipulation is done with a purpose of locking people, trader, or cheating someone. Now, doing 1,000 Bitcoin or trying to manipulate this particular metric doesn't make any sense for Bitcoin holder. Why? Because by any investment fund, I've talked personally to quite some of them. None of them using this metric so far. At least last time I talked, it was 1 month ago. And I don't think the situation has changed since 4 months. It's still very innovative for them to build any strategy based on behavior analytics. I have not met any single investment fund who is doing it. Yeah, just for us to be clear on it. And they do apply a very sophisticated model, but they more like arbitrage and market making, where they can control risk and project their rewards. What we're discussing now, it's not deployed to my knowledge by any fund who would be able to manipulate market to cheat others to play the game and they can play against it. We might come to this situation maybe at some point of time. But the only actually surprise, the only metric which I would think might have been tried to misinterpret. It was it's a halving. Yeah, the only one because even the last, not the current halving, the one before, was kind of 50-50 known event. For those who are outside of Bitcoin newcomers, it was still not very known. Now, literally everyone knows about halving. So the big players, they try to utilize it as the pump before, the dump during, and try to confuse us, or small players. But this is the only one which is known metric, which track records that the market is growing shortly before, struggling, and then rapidly. So all others we're discussing now, good if 1% of people involved in crypto know about them.
Yeah.
And okay, maybe 10% know, but who is using it? Very, very few. So it's not manipulated at the moment.
Yeah, I think it's this is also like I mean, let's not get too philosophical, but this is also the reason why we started Santiment in the first place, because we understood that pricing data in crypto is very easily manipulated. Even in 2020, the pump and dump groups, wash trading, whale manipulation, this is all happening in terms of price related data. So what we wanted to do is we wanted to create new types of metrics and indicators that are less easy to manipulate, and also that are more cutting edge and to some point even a bit obscure, so that there is less incentive and sometimes even less knowledge about them to be able to be manipulated. So yeah, I think so far I would be very surprised if somebody is just based on the MVRV long short difference trying to manipulate the market. Maybe in the very near future, but at the moment I would be surprised.
Yeah. It just the behavior of market participants, it also constantly evolves. Like the more network becomes decentralized or distributed, the behavior becomes also not so extreme. Like the difference between initial token holders, big whales, and small latecomers, it's like changing over time. In the Bitcoin, actually, analysis on one side is easier. You can apply technical analysis. It does work fine because it's a liquid market. On the other side, it's more complicated because you need to understand precisely what metrics are using for what purpose. Where, as we've shown for ERC20, which have experienced only one or maximum two pump and dump cycles, sometimes it's super straightforward. And for getting out of our fast presentation to more slowly consumption on understanding how we do it, just go to our insights. Most of the sites still open and free to read, and you will see the flow of thinking, how we analyze the things going from one metric to another to come to some conclusions. Yeah, and most of the time it's relatively straightforward and actually standardized process for smaller coins.
Yeah.
Okay.
Hey guys, a couple other late requests that I'm seeing. We may or may not have time for them, but someone requested that we give a quick summary of how to set an alert. And then I also see someone wanted to know what metrics might be interesting for a Ripple trader. And then someone also wanted to know whether we ever plan on adding some smaller tokens like Band or Cosmos.
I think, yeah, for Band, well, isn't Band still in ERC20? Am I crazy?
Yeah, it is.
Yeah.
Yeah, so we have Band, it looks like. What about Cosmos?
No, we don't have Cosmos at the moment. Band is having a blast of a day. And it also a spike in exchange inflow. Oh, look at that. Yeah, for Cosmos.
Maybe while you're on Band, you could just show like how to set a quick alert on it. And I'll let the guy know that Cosmos is something that maybe we'll get to down the road.
Yeah, so basically you can just click here. So as far as setting alerts, there's a few different ways. So as far as setting an alert for a specific address, it's the process that I've already shown. So here you paste the address and you select a coin that you want. So let me do that again real quick. So this is already a link to it, I think. Oh, this is for basic attention token. This example I don't have time for, so let's do Aragon. Yeah, so you paste the address and you select an asset that you're interested in, and you just click generate signal here. It will automatically pick the asset that you selected. You can select whether you want the balance to be alerted when the balance of the address decreases by a certain amount or increases by a certain amount, and set a specific threshold for it. And then, well, you need to have a Sanbase account. It can be a free account, but you need to have it in order to be able to connect to a specific sort of distribution channel for this signal. So either if you want to get notified via email, you need to connect it to your settings, or if you want to get notified via Telegram or push, you just go into, there's a connect button here, you click on it, and it will take you to your account settings to get everything set up. And finally, you can set the frequency of notification. So, if you don't want to be spammed in case this address starts moving a lot of coins a lot of times, you can say, alert me no more than once a day for this particular address. And then finally, you can set the signal to be private, so it can only be used by you, or you can set it to be public, and then other people can see it and copy it for their own uses. You can set up the name for the signal, let's say big and whale. Description, notify me, yep, and you click create signal, and signal was successfully created. So that's as far as setting up signals for a historical balance tool. Now we also have, let's go back to band, actually I have it here already. We also have signals for a number of our metrics as well. So we are already in the process of adding more sort of signals for different metrics, but at the moment you can set an alert. So you go to, once again, you go to add signal right below the name of any coin, and you choose a signal type here. So at the moment you can select a signal for a price of a coin, the volume of a coin, the market cap of a coin. This is as far as financial data is concerned. As far as social data is concerned, you can set alerts for a number of social events, whether that's the amount of social volume of a coin, amount of social volume on a specific channel that we track, other things that we don't have time to get into, the development activity on the coin, and then a number of on-chain metrics, including exchange inflow. So let's say, for example, I am interested in knowing when there's a huge amount of band moving into exchanges. So I go, once again, let's repeat the whole process. I click add signal, I go to change signal type, scroll to on-chain, I select exchange inflow. So now it says, okay, you choose a condition. I say, I want to know when, let's say, more than 1,000 or 10,000 band starts moving to exchanges. And once again, these are the same. You can even see how many times your signal would have fired, so you can play with the thresholds a bit. 100,000, it's only 31 times. What about 1 million? It's just 2 times in 3 months. So you can see here the thresholds of how many times your signal would have fired over time. So you can set it up exactly how you want it, so that it's not too sensitive, and at the time it's actually contextually relevant. And then notify me via email, Telegram, or push notifications. Set it to private or public, and create signal. And once again, you're going to be alerted on Telegram or email or via push notification anytime that your condition has been met. So that's as far as that one's concerned. As far as Ripple is concerned, there was a question, right? What you can look into as far as
yeah, just like a main go-to metric that might be reliable for.
Yeah, Ripple is tricky. I myself kind of stay away from it because I don't really know. Like its on-chain data is very weird. Like if you look, for example, in their daily active addresses. So this is just the amount of addresses. Yeah, this is last 6 months. This is just the amount of addresses that are on a daily basis interacting with Ripple. So you can see there's massive spikes, but it's like, yeah, sure, you'll see spikes in daily active addresses during a rally and sometimes during the tops. We didn't really go over that today, but we did it in the last webinar. But these spikes are humongous. So it goes from 5,000 daily addresses to 230,000 daily addresses interacting with Ripple. And all of a sudden here you have it as well. It goes from 9,000 addresses almost to 115,000 addresses. So it's very weird. One of the things that I would really focus on when it comes to Ripple is probably social data and social volume. I like using social volume to figure out exactly kind of where the danger points for Ripple could be. You can see for social volume over the last 6 months, it kind of earmarked several red zones for Ripple. So here at this particular top, here before a consolidation, at the almost at the very top, actually slightly before it, the crowd started, hitting peak FOMO and peak hype, and then the whales probably dumped on poor souls. Here during this sort of interim or local top, and then right here before this correction, we saw a spike in the social volume for XRP. Social volume is an extremely powerful metric that we didn't really go over this time. We went into it in the last webinar. So if you're really interested in that, scroll a bit down in our videos on our YouTube channel, and you'll find the link to the last webinar we did, where we talked a lot about how social volume data can be used for trading and spotting tops and bottoms. This is something that nobody else has because we developed the social data set completely from scratch. We track currently over 1,000 different crypto social media channels, and we plot, develop different metrics on top of that data. The most simple one is social volume. Today, I've also shown emerging trends, which kind of looks at the biggest developing topics on crypto social media at any given point. We also have some specific social sentiment metrics. So there's a lot of stuff social related that you can play around with on Sanbase Pro. Okay. Is that it as far as the questions are concerned, Brian, Gary?
Yeah, nothing else significant here.
Yeah.
Okay, cool. Brian, if you want to go maybe 5 minutes into your template for sand sheets, and then we can wrap this thing up.
Yep, sounds good. All right, so I'm going to keep this pretty brief, guys, and if you have follow-up questions for us regarding this template, I'm more than happy to talk to you in the general channel on Discord. So what we're looking at right now is our top holders supply sand sheets template, and this is available to all of our Sanbase Pro users. What it does is it measures the fluctuations in percentage of total supply holdings by our top 1, top 10, or top 100 holders of some of our key specific Ethereum or ERC20 assets that we track. Right now, we've got about 15 here, and to sort of help navigate through the noise, I've highlighted Ethereum here in blue and REN here in a really thick light green. The reason for that being is that I want to show off, firstly, what REN is doing right now in terms of the top 100 holding addresses for the project. Over the last 30 days here, which is what we track, and what time interval I think is relevant to really see what these top holders are doing, we've seen a steep decline all the way down to about negative 0.5% or so, excuse me, actually negative 0.8% at its bottom, before, over the last 3 to 4 days, we've seen a sharp uptick, especially at yesterday's close. So between Monday's close and Tuesday's close, we saw a spike from negative 0.8 to negative 0.25, which is a significant jump in the total supply being held by these top 100 REN holders. And sure enough, REN during this time, shortly after this close, actually, about 8 to 12 hours after, kind of had a mini decoupling from Bitcoin and shot up around 7 to 10%. I don't know what it was at its peak, but it was significant enough where this top holders model probably had a lot to do with what the price ended up doing, because there were some significant buys within this group of top 100 holders that led to enough of an impact in volume that it shot up the price independently from what Bitcoin and the rest of altcoins were doing. You can also look at how that looks on the on-exchange holdings exclusively, which I like to sort of look at a bit more than just the off-exchange or total exchange, because it gives a good indication of what people are doing with their holdings on specific exchanges, which is generally a sign that there are going to be trades imminent, not just in their offline wallets, but if it's done on an exchange, it means that there's going to be some significant buys or significant sells that are incoming. And sure enough, this exact day, if we look back to the main one, the 22nd, that was where things kind of bottomed out here. We had around the 23rd maybe is the official bottom. But if we look here, the on-exchange holdings reached a bottom on the 22nd. They were actually down about a full % over this past 30-day window. And now it's up about 1%. So it had about a 2% swing going from -1 to +1. And if you were following this initial burst from about the 22nd and 23rd, you probably would have gotten a 2-day or so foreshadow for this 7 to 10% bump that Ren has just experienced. And so I think it's a great sort of example of how this kind of model can be used to your advantage to see where prices may go as a leading indicator, as opposed to just seeing a correlation or sort of justification for why prices are doing what they're doing in real time. You can also see here in the background, Engine is still getting a huge boost on exchange holdings from the top holders. So for those of you who might be looking to profit take from a coin that's gone up, I think something like over 100% in the last 90 days or so, this might tell you that there's a little more steam to this run, because the on-exchange holdings of the top 10 holders in this particular instance seem to continue wanting to buy. So this is a pretty cool thing to look at. I would definitely go between the top 100 holders for total supply and then the on-exchange for the top 10. These are two of my go-to tabs that I look at. We also have the top one. Let me see if I can find what I wanted to show you for Ethereum. Oh yeah, right here. So I wanted to also show this chart, which is the top token holder percentage held over each of the past 4 weeks. And it actually illustrates what their percentage of the total supply is that is held specifically in their wallet. This is literally just the top holder for each respective project, and it shows what their total holding is of the asset. So Ethereum here, if you look, 3 weeks ago, the top holder, the largest holder for Ethereum, held about 3.09%. The next week it jumped up to 3.33, the next week 3.37, and now we're up to 3.39. So over the past 3 weeks, we've seen an increase from the top holder in the total supply of Ethereum. And this is pretty significant for the long term of Ethereum, in my opinion, because it means that the person with the most weight in terms of their actual trades is showing increased confidence over time in Ethereum's price here of around the 190 to 220 range that it's kind of hovered around for the past month. So I like to look at this, and I also like to look at the actual top 100, as this really gives an indication of how much of a hold these top 100 holders have on any specific asset. You can look at an extreme example here, like ELF. The top 100 holders of ELF hold about 98.5% of the total supply, which is just absolutely massive. For comparison, the top 100 for Ethereum, because it's the second largest market cap, has just 34.4% or so of these 100 holders in terms of their specific holdings. So generally, you can look at the health of a coin by seeing just how much the top 100 holders can impact the fluctuations in it. And if it's too high, just know that it's a bit more risky. And in general, the smaller market caps are going to be the ones that have these really high ranges. And of course, just the top one or so, you can look at Chainlink, for example, the top holder for Chainlink. If he decides to dump at some point, that's a pretty big dump because he owns 35% of the coin at a given time. So this is a great chart to constantly check out and keep tabs on over time to see how things may be changing. Maker, for example, huge increase over the past 4 weeks. 27.06% held 3 weeks ago. Now it's at 28.8, and this is just the top holder alone. So he or she has been buying into it significantly during this time. Like I said, more questions about it, let me know. If you want access, just let us know in the general channel. As long as you're a pro subscriber, we will gladly get you on. I'm going to stop my sharing here, and if you want to just wrap it up, Dino, we will conclude the webinar here.
Yeah, I just say it's been a lot, and I would not expect anyone to get into deep understanding just from one time talking with us. It's normal. Like, it took us, I think, 2 years to build all these tools. So it's took us at least, I remember, half a year to establish some initial frameworks how to analyze the market. Take time and always strive for understanding why these metrics are showing you something. Don't fall into victim. Okay, I found something. Okay, it should be working all the time. Market's constantly changing, but the behavior of key market participants will always be the same. As long as we keep ourselves as close as possible to this ultimate truth, all will be good if we understand how the other market participants behaving. And that's it. That's it. We will continue, keep sharing, and we always keep talking to our community on Discord or whatever channels we're selecting. Yeah, just stick to it. It's very interesting by itself. Once you start applying game theory, psychology, crowd psychology, technical analysis, behavior analysis all together, it becomes very interesting to understand how this network behaves. They're like living organism, and with specific different groups. It can be very interesting, and it's rewarding. As I said, all crypto is done that those who make things with a proper mindset, they are rewarded. So this will be from my side. I know, Dino, you can.
I would just thank everybody for listening, especially those who stuck through until the end. There was a lot of, unnecessary technical difficulties at the beginning. Sorry, I got something in my throat. Anyway, thank you all so much for joining the call. Let's move it on to Discord. The link is going to be in the description of this video. If you like what you heard today, we talk about this stuff pretty much on a daily basis on our Discord channel. So the recording is going to be sent to you. Everybody that's subscribed to the link will have a edited recording of this video, so there's no technical difficulties if you want to rewatch it. And one last time, app.santiment.net/pricing, going to and entering the webinar code during the checkout process will give you 30% off. Thank you all so much, and let us know what you would like us to cover in a next webinar. It's probably not going to be in at least another month or so, but we're always looking for topics that you guys are interested in. And last time it was social volume, this time it was whales and strong hands. Next time it might be something else. Thank you all, and join our Discord and come talk to us on a daily basis. And check out Santiment.net. There's a lot of cool stuff that we didn't get to go over either today or in the last webinar. That's going to be it for today, guys. Thank you all so much, and I'll talk to you next time.
Yeah,
thanks so much, guys. Don't forget, we also have our This Week in Crypto coming up on Friday if you'd like to join for that as well.
Yeah. Yep. And hopefully we have SpaceX already now. Or I don't know. Gary, is it now or not yet? anyway.
It's in 2 hours from this moment.
Oh,
okay. So we have time for some dinner. I mean, for dinner for us in Europe and maybe for lunch in
yeah.
US. Good.
Okay.
Thanks for staying with us a long time. Yeah.
All right. Thanks, guys. Talk to you soon.
Yeah. Thanks.
Bye,
Bye-bye.
everyone.
Bye.